Most traders fail at this one specific thing. If you can nail this thing, you're going to be making money practically guaranteed. In this video, I'll explain to you how I pick out winning trades, trades that go up 50, 100, 80, 60% every single day, and avoid trades that have a downfall like this. That's what we're going to be explaining. Now, like with any strategy, I'm not going to claim that this works 100% of the time because obviously it doesn't. But if you can manage your risk and you can have a strategy that works like 95% of the time, you're going to make a shit ton of money. This has worked extremely well for me. It's worked extremely well for the people in my community. So it can work extremely well for you. We're going to go through all the steps, what you need to look out for. Let's not waste any time, let's begin. So there's four main things that you need to look out for to try and get this stock and not this stock. There's four main things. So we're going to go through each and every single one of them. Let's go. The first thing is high opening volume. This is extremely important. So if you look at the chart over here, you can see the pre-market chart over here and you can see the pre-market chart over here. You can see the volume is very tiny. Now the reason it's very tiny is because the opening volume is so massive. And because it's so massive, pre-market volume looks tiny. Over here, you can see the pre-market volume isn't really that tiny because the opening volume is at the same level. Meaning opening volume is really not that good. We want to see opening volume like this. This opening volume is fantastic. It's really high, it's really big. It's way better than the pre-market one, right? Over here, the opening volume doesn't even beat the pre-market high. So that's the first thing we need to see. We need to see a lot of volume coming in. As soon as the stock opens, as soon as the gapper opens, we need to see a lot of people buying shares like this. Because that shows demand. When there's a lot of demand, the stock price goes up. When the stock price goes up, you're going to make a lot of money. So that's the first main thing we need to just check out. We need to see the demand coming in. If you see a stock and has barely any volume coming in, it's probably going to end up like one of these and it's just going to end up just going down. So we need to see a shit ton of opening volume as soon as market opens. Very important. Next thing we need to see is a low float. A float is pretty much the amount of shares that are available to be traded. So if you look at a company like Apple might have billions of shares out there in the market to be traded. That's the reason that Apple doesn't go up. Apple might go up 2% in a day. We need to find the stocks that go up 50, 60, 80, 100% in a day. And those stocks are only going to go up that much if they have a tiny float. I'm talking like 2, 3, 4, 5 million. That's it. We do not want to be trading the stocks with like a 500 million float, 2 billion float. We want to be trading the stocks that have like 500,000 shares afloat, 2 million shares float, 5 million shares float. Those stocks are going to be the ones that are going to make the big moves. That's very important. The next thing we need to see is a low market cap. Now, similar to the float, a low market cap means that the stock is going to go high as well, right? If a stock is $1 trillion market cap, it's not going to double in a day, obviously. However, if a stock is like $3 million market cap, the chances of it doubling to $6 million market cap is very high. It's way higher than the 3 trillion anyway. So that's the third thing we need to check off. The fourth thing is a support level. So you can see over here on the left one where the stock actually ended up going up. You can see that there's a support level roughly about over here. This level over here is where the stock went down and it bounced back up. This is the same level over here. It's a very obvious support level. We're going to be entering on support levels. If you take a look at this stock, the support level isn't very clear. This is the lowest it's been pre-market. It's very close to the lowest it's been pre-market. There's not really a lot of support. This is kind of just like a random price. This you can see is the same price as this over here. So you can see it's very clear support. This is like a bit like, where's the support? I don't really see the support. And therefore it goes down. Here there was strong solid support with a lot of volume and that's what the stock went up. So that's the last thing you need to focus on, is support. Now this is all well and good, but how can we apply this to a strategy? Now we're going to apply this exact thing that I just told you, the four specific things I just talked about. We're going to apply this to a strategy. I'm going to go through each one of the steps, step by step. I'll explain how to do it. So let's begin with step number one. Step number one is a stock screener. Go to a stock screener right now. Everybody overcomplicates this. Just use TradingView's default stock screener. You don't need to go to FinViz, YouTube, just go to TradingView, the most basic stock screener. Don't overcomplicate it. It's going to look something like this. And you want to sort it by gap. Now, one important thing to consider is you need to have a minimum gap of 20%. So you can see over here, this is how you sort by gap, and you can see all the stocks gapping up. You want to be trading stocks that are gapping up above 20%. You do not want to be trading stocks gapping below 20%. The problem with trading stocks gapping below 20% is that there's barely any volume. Obviously, the higher the stock is going to be gapping, the more people are going to be buying, the higher the volume is going to be. And you can see it over here. The highest gapping stock has the most volume. And second highest has a lot of volume, third highest has a lot of volume. But in general, it decreases the less the gap is. And in general, it increases the more the gap is. You can see it right over here. This is why it's important to have a stock minimum 20%. I literally never trade stocks that gapping up like 5, 6, 7%. I literally never do that. It's always above 20%. So that's a very important first step. Get this thing over here and you're ready to go. Now, step 2 is to create a watch list. So we're not going to be trading all of the stocks that are gapping up 20%. We're only going to be trading one stock. So it's very important to nail the stocks down and find a few, maybe 1, 2, maybe 3, and make a watch list. Now, how do we make that watch list in the first place? Well, like we just explained, right? We need a small market cap, small float, high opening volume, support levels. That is essential. That's how you create the watch list. So go ahead, analyze every single one of those pre-market charts, figure out which one's the best. Now, step 3 is to buy. Once you figured out the 1, maybe 2, maybe 3 stocks that you think are the best, you want to wait for market to open. And once market opens, you want to look at the opening volume. Which one has a lot of opening volume? Some of them have no opening volume. You can instantly forget about them, right? So you can instantly stop watching them. If you have 3 stocks on your watch list and one of them has terrible opening volume, that's actually a good sign, because now that means you only need to focus on 2. You don't need to start watching 3. You can forget about 1, just focus on 2. From the 2, you want to wait for one of them to confirm support. And once they confirm, and only once they confirm support, that's when you want to enter. Now, people also overcomplicate confirming support. It's very simple. Confirming support literally just means that it holds your support level and there's a bunch of volume that comes in. That's all it means. Then you start seeing a reversal. So you see the stock, it goes on a drawdown, it hits the support level, there's a lot of volume coming in, and then it starts curving back up. That's when you want to enter. You never want to enter as soon as market opens. That's a very bad idea, because otherwise you might not even know about the opening volume, and then boom, it just goes down. So never enter as soon as market opens. It's a terrible idea. You buy only when support is confirmed. So if we look at this picture right over here, you can see this is exactly where I've drawn out support. And I entered right over here. So the stock went down, it hit the support level. You can see a lot of volume came in. And only when those things happened, when the support level was confirmed, the volume started coming in, the stock made a reversal, that's when I entered. I didn't enter as soon as market opened. I didn't enter all the way up here and all the way up. I literally entered when I saw the stock was confirming and respecting support. That's how you get it done. Now, step 4 is to sell. There's a couple of reasons that you should sell. You should not sell whenever you feel like it, or because you start a timer or something. You start for 3 main reasons. The first is VWAP resistance. Now, VWAP resistance, if we go back to the chart, if this stock, for example, went up and it hit this level over here, this line over here is VWAP, and it continued going back down. So it hit up, went back down. Tried to go back up, hit back down. Went up, back down. If it started doing that, that means there's a lot of resistance and weakness on VWAP. That would mean that I would sell. I would instantly just see that, boom, I'd sell. I'm out, right? That's the first reason. Second, I guess, reason or whatever level we want to call it, to sell is a pre-market high. So you can see this over here. This would be the pre-market high, which means that if the stock ends up breaking through VWAP, the next level that you could sell at would be this level over here, right over here. And the third reason is a $0.50 whole dollar resistance. For example, if the stock is, let's say, 50 cents or whatever, the next resistance will be $1, right? If a stock is $5, the next major resistance point would be $10, etc. So in this one specifically, the reason I sold was because it hit the pre-market high. This level over here, it hit it, and that's exactly when I sold. That's as simple it is. That's how you capture the entire move. Step number 5 is to repeat, right? This is not going to work if you do this once a month or twice a month. You need to be doing this literally every single day. You have to follow the same steps, go to the screener, watch list, and try and trade the stocks every day. And some days you might find that there's really nothing worth trading. Some days the gap scanner is really slow. Some days you just don't find anything interesting, whatever. That's fine. Don't force that trade. But when you do see trades, be consistent. Go for the trade. Don't keep switching strategies in, out, in, out. You need to be focusing on the same strategy, being very consistent. And again, when you're first starting out on this strategy, do it with a paper account. If you're nervous, if you don't really know how it's going to go, don't put real money into it. Just do a paper account. Just gain confidence, keep doing it, practice, and then go on with real money. And another thing that's very important, and nobody talks about this, is you need to analyze every single trade that you make. So every single trade that you make, you need to have like a journal, a video, whatever you want to do. You want to analyze, okay, why did I pick this stock? What were the reasons that I picked this stock? Why did I enter? what are the exact reasons that I entered, and be honest with yourself, right? If you entered because you just got really nervous and you saw the stock going up, tell yourself that that's a problem and work on it. And the next time you see a stock going up, you tell yourself, okay, I'm not going to enter because it's going up. You see what I mean? And same thing for why you sold. Ask yourself, why did you sell? Maybe you were nervous, maybe you just got out too quick, maybe you got too greedy. Like, tell yourself, why did I exit? When did I exit? At what price? Analyze this, and that's how you get better. Now I'll show you some proof that this works for me and a bunch of others. So as you guys know, we have the Drako Room. This is my personal community. This is, you can see all the people that are making money from this community. It's crazy. Today, this guy made Nick, he made $261. Luke made $216. Pawnee made $114. Taz made $405. Taz made $2,870. You can see people are winning like almost every single day. Someone is making money. It's crazy. Inside the community, we also have the watch list channel. This channel is where I explain everything. I do all the work for you. So when you see the gappers in the beginning, you don't have to figure out which ones to trade because I literally tell you which ones I'm going to be looking at. Every single day I tell you, okay, this stock I'm looking at, this is a support level, this is why I think it's interesting. This is another stock, this is a support level, this is a support level, blah, blah. Every single day I'm telling you the exact stocks that I'm watching. I make it super easy for you. When you join the community, you also get access to every single one of my trade reviews. So earlier when I was talking about analyzing every trade, like this is it. I make a video in every single trade that I make a video. This is what I did, this is what I didn't do, I could have done this better, etc. This is extremely valuable insights, and I explain the stock I traded, when I entered, why I entered, when I exited. I explain everything in all of these trade reviews. They're extremely, extremely valuable. So if you guys do want to join the Drako Room, click the first link in the description right now to join, because I am going to be closing the group very soon to just focus on the members inside. I personally respond to members inside the community, so if you do want direct access, this is your best shot. So if you guys want to watch a video where I explain the perfect trade setup, click the video that just popped over here. This literally turned me into a profitable trader. This exact trade setup, I shared in that video, go click it. And if you guys did enjoy the video, don't forget to like, subscribe, comment, share, everything, blah, blah, blah. Thank you guys for watching, I appreciate it. Peace.